Back on Morning Movers. Shares of Crowdstrike are lower this morning after a downgrade over at Baird. Baird downgrading it to neutral, but it did raise its price target to 430 from 390. Baird also downgrading Cloudflare and Fortinet and commenting on the sector, saying relatively full valuations of the larger security stocks imply a more balanced risk to reward at current share levels. The $430 price target on Crowdstrike would be actually a new all-time high, and that's brings us to Options Corner. Time now for that. Joining us to take a deeper look at Crowdstrike is Rick Ducat, lead market technician. All right, Rick, let's start out with what trends you're seeing on your first chart.
Yeah, sure. I mean, who'd have thought that during July of last year we'd be above our highs? You know, we hit a high point on Tuesday last week, new intraday highs 411.30 here. You can see as well that we pushed above that highlighted volume node near about 380. That also is where we have our +1 standard deviation channel and our 21-day EMA. So that could be a key supportive point. Below that, 365 to 360 is another volume node, Diane.
And then let's talk about some of the options activity that you would be paying attention to. What kind of options activity did you see in Crowdstrike on Friday?
Yeah, well, just looking ahead, first of all, to our monthly expiration, the February 21st expiration series, the biggest open interest is at the 510 calls. There's about 3,000 contracts there. And the 310 puts, about 1,500 contracts there. And the 510 calls were the outlier. All the other open interest was around 2,000 at the most there for this one. But, you know, that was the big one. Our final thing, our big trades, plus 250 January 16th, 2026, 410 calls, and the same increment January 15th, 2027, 410 calls here. So they paid a total of about, what was it, $4.42 million in debit for these. Break evens, 481.50, 515.30, well within that zone of probability there, Diane.
All right, that's Rick Ducat with the chart and some options activity for Crowdstrike, lead market technician. Now, we want to welcome in Tom White, senior options contributor and co-host of Fast Market, to take a look at an example trade. Given this downgrade that we're seeing from Baird, how would you structure an example trade, Tom?
Well, I think you take a look at it. Rick mentioned it hit all-time highs last week, above $411 a share. Now, remember, this is a downgrade with a price target hike on the stock. I think that's one of the key takeaways, where they still like the stock, but at the same time, maybe they think that valuations and that forward-looking guidance getting a little bit dicey here at this point. So I looked at a strategy. They report earnings on the 4th of March, so I want to avoid that event. So I went out to the February 28th weekly cycle. So I've got 3.5 weeks till this trade expires, where I'm going to do a neutral strategy, take advantage of the higher implied volatility levels that we're seeing not only in the overall market, but also Crowdstrike today. And this neutral strategy takes advantage of it, because what it is, it is made up of an out-of-the-money short put vertical and an out-of-the-money short call vertical, creating this neutral strategy where you can take advantage of higher extrinsic option premium. You're going to collect more on this type of trade. So looking at, on the call side, selling the 425 strike call in the February 28th weekly cycle, and then buying the 430 strike call, so a short $5 wide call vertical. And then on the put side, we're going to sell the 360 strike put and buy the 355 strike put. So this is a short $5 wide iron condor, where we're going to collect probably about a $2 credit at today's opening prices. That's what you can profit on this trade. You can see here the profitability above that zero line is $200 per spread, right? You've got $300 in risk, but that's below 355 on the downside and all the way above 430 on the upside. If I collect a $2 credit, takes my break evens down to 358 on the downside, and then all the way up at 427 on the upside over the next 25 days. So in essence, you're creating this strategy to take advantage of that higher implied volatility. Time decay, or theta, is positive in your favor. So on a daily basis, the price of the short iron condor into expiration should decrease in value. That allows you to buy it back cheaper, or the ideal situation in a strategy like this is that it remains between those break evens, and both of those short verticals that make up the short iron condor expire worthless, and you get to keep the $200 that you collected. Now, this is a strategy all about probabilities of success, right? On the downside, at that the 360 strike call, you've got a probability of about 75% that short put of the 360 strike is going to be out of the money. That's what you want, higher probability of success. And then on the upside, the 425 strike call, you've got a probability of that finishing out of the money, which is what you want, of nearly 80%. So this takes advantage of the higher implied volatility levels, takes advantage of time decay or theta working in your favor as this contracts in value on a daily basis. But then it gives you a range-bound type of trade here where you can take advantage of some consolidation into that earnings report. And remember, the short call vertical is above the all-time high in the stock that it hit last week. And then you've got plenty of cushion to the downside also. But you want some consolidation in this type of trade, Diane.
Okay. And I know you mentioned this hinges on probabilities of success, and it sounds like there are a lot of strong probabilities here. Is there any risk that we're missing in this example trade, Tom?
Well, the nice thing is it's still risk defined, Diane. That's the key here with this. You know exactly what your downside is. You can only lose on one side of this type of trade, so it's still risk defined. You got $300 in risk per spread on this type of strategy.
That's a neutral example trade strategy for Crowdstrike there. It's under pressure today in the pre-market. Thanks so much, Tom, for that example trade there.